And welcome. It's Mary Ellen McGonagle, founder of MEM Investment Research. And today I am going to be sharing with you the best practices and ways that you can uncover fast moving, big winning stocks. So we'll get more into that as we move on. For those of you not familiar, as mentioned, I am the founder of MEM Investment Research, and I do have many years of experience both on and with Wall Street. For 15 years, I was with William O'Neill and Company, founder of Investors Business Daily. I'm pointing this out because it was during this time that I traveled the globe introducing and educating portfolio managers and analysts on the O'Neill methodology. And for those of you not familiar, he is all about uncovering these high performing growth stocks. There are characteristics common among these stocks before they take off. And that's what I'm going to be sharing with you today. So let's go ahead and get started. A couple of items as far as backdrop and background in order to be comfortable with this system and be successful. Some of the beliefs, and the first, of course, is high growth stocks. They do trade higher and faster during bull markets. And with my MEM Edge report, we've had many stocks that provided triple digit returns coming out of that March bear market. And then within that, you're also going to want to diversify your holdings over several strong areas. We're going to get more into that because these stocks and the groups that they're a part of, they will ebb and flow on a daily basis. So rather than have all of your stocks in one particular industry group, you will want to spread that out. Also, very critical is that you have a solid exit plan. These growth stocks, they do trade much higher and faster if you have the tools to get in front of those winning stocks. Of course, I'm going to be sharing that with you, but oftentimes they will drop faster than the market as well. So you will want to have an exit plan. I'll share with you ways that you can know that the uptrend is over. And then also, again, I mentioned this, you do want to have a strong belief in that trading system that you're using in order to be successful. Your strong belief will keep you in the stock during bumpy periods. And then also you do want to make sure that the overall market, that backdrop, that's going to be your top guide. You want a healthy backdrop in the broader markets before putting your money to work. So here's what we are going to be covering today. The markets, I'm going to share with you where they are currently, and then we're really going to dig in, take a look at those characteristics that are common among these big winners just before they take off. What sectors have these winning stocks? The group attribution of your stock is really critical. Bill O'Neill, in his book, gave it a 2/3% as far as the importance of being in a strong industry group within a sector, and then which time frame of chart is best for you. And we talked before about that exit plan. That's going to be another critical component when you are trading, and not just these fast growth stocks, really any style that you prefer. So let's just take a quick look here at the broader markets. The S&P 500, we are currently in an uptrend. This is being recorded mid-November, but you want to have a system in place. And I always pay attention to these simple moving averages. You want that index trading above an upward trending shorter term simple moving average. And then I have outside momentum indicators, in this case RSI and stochastics, that are both up above that net neutral 50 and trending upward. So unlike periods, for instance, in September, we got a very sharp pullback, and of course this bear market when everything as far as your momentum indicators and your indexes fell below key support. A weekly chart, for those of you longer term in your investment horizon, this is a 10-week or 50-day simple moving average. And ideally, you want the broader market index to be trading above that upward trending 10-week simple moving average with your outside momentum indicators also trending upward. This is the intermediate term is up. And then, of course, a monthly price chart here, it's going to smooth out a lot of that whippiness, but it's also going to provide you intel on an even longer term horizon. I use a 6-month simple moving average. We're certainly having a strong week, I'm sorry, a strong month here in November, but generally your longer term uptrend is constructive. So let's dig in. We really want to uncover, and again, I did want to share with you that the information we're going to be reviewing is based on a proven system. Bill O'Neill has written several top-selling books, and it's all about uncovering those big winning stocks in prior market cycles. He went back to the early 1900s, studied each of those big winners from all of the market cycles subsequent to that, and uncovered these common characteristics. And the first item I'll share with you is you want heavy demand led by institutions, and that you're going to be told that by the volume. It's important because these institutions, really, when you're looking at a chart, about 80% of that volume and that activity is these big guns. They are the guys driving the markets. And then within that, the stock that you are selecting needs to have strong earnings and sales. I would argue this is the number one driver. You want not only current, the most recent quarter, but also estimated growth going forward. You want that to be strong. This strong earnings and sales growth, it's often driven by the companies providing innovative products that are in a growth area of the markets. For example, cloud computing, of course, has been very critical during this recent pandemic period. Also, Internet of Things, 5G. So these innovative products are going to drive demand. They're either improving efficiency or other characteristics, but this is often what will help move a stock higher. They're in an innovative period. And then it can be market driven or demand driven. So, an increase in military spending, for instance, with the government, will in fact push that particular industry group. So, several drivers that are going to cause this stock to move higher. So let's go ahead and take a look at an example of what I call a winning stock. This is a weekly price chart, Ring Central RNG, and I'm taking us back on this weekly price chart to this breakout period here in the beginning of 2017. This is when my MEM Edge report first identified this stock. And I talk about stocks emerging out of a base. The stock breaks out to a new high above this base, very heavy volume. Take a look at these arrows on this weekly chart. And what I'm pointing out to you here, this is on Ring Central. It's taking us to April 20th, 2020. But each of these arrows is pointing out to you when Ring Central reported their quarterly earnings. And you can see each of these periods, the stock obviously came in with very strong numbers, gapped up, continued to advance. So that is going to be your primary driver, is these strong earnings where they're coming in this case, early on, it was triple digit, and from there into the 20% year over year earnings growth. So when you're trading these, that was a weekly price chart. I'm sharing with you now Ring Central on a daily chart. You are going to want to have a system in place because on that weekly, it looks like a very smooth ride. But in fact, this particular chart is taking us to the end period here is May 15th, 2019. But I wanted to point out to you, as of, for instance, software stocks did fall apart prior to that 2018 bear market. So when I talk to you about having an exit plan, from my work, as the stock starts to break below, in this case, this 10-day simple moving average, that's a bit of a warning sign. You can emerge out of that. But once we break below this red 50-day simple moving average on big volume, and you marry that with a negative RSI and a negative MACD, that is your signal that it is time to exit. So let's go ahead and talk about some more common characteristics of these big winning stocks. I talked about strong earnings and sales. And again, that is going to be your primary driver. Strong sales generally will, at some point in time, translate into strong earnings. I'm pointing this out because oftentimes you'll see with IPOs, they'll come out, they won't quite have earnings in place. We've seen quite a bit of activity this year with IPOs, but those strong sales can guide you until they eventually do become strong earnings. It also has to be a period when those earnings and sales are in what I call a period of sustainable growth. In other words, there is a backdrop of demand for the products, the services that that particular company is providing. For instance, coming out of that bear market, a lot of what we call lockdown stocks that were helping keep people connected has now been transferred to recovery stocks. So again, sustainable growth that's going to help propel the demand for that company's products and in turn the stock price. Talked about the company providing a product or a service that is innovative. So, is the company providing a new way of delivering an existing product, for instance? And I talk about using history as your guide. And again, we can go back really over many different decades and periods, and you'll see companies that are innovative. When McDonald's first came out, late 60s, the concept of fast food was very, very new at that time, but it was a new way to provide. Uh, Food, if you will, and the stock did go on to become a big winner. So that innovation is really going to be a big driver. The innovation provides the push that in turn is going to drive earnings and sales, and that in turn will move the price of that stock higher. Also, we talked about institutional support, and you want that stock to be under accumulation. So, an increase in volume can tell you that there's been a shift in the market sentiment about that company or even an entire sector. So, you are going to want to pay attention to volume and marry that with these other characteristics that we are talking about as it relates to earnings and sales. Also, when you see an increase in that volume, the amount of shares that are being traded, as the stock is trending upward, we talked about the stock finding support at that upward trending moving average. If it's doing so on volume, that is really going to provide you the confidence that the stock is headed higher, particularly as it's coming out of this consolidation period or emerging out of a base. That's increase in volume is telling you that institutions want in, and it validates that breakout and is really a good indication that the stock is going to indeed move higher. Let's talk about more traits of a stock that is poised to outperform the broader markets. And these are items that you can, in fact, screen for if the stock has hit a new high in price. And here you want to use that 52-week high in price as your guide because in this case, when that occurs, there's really not much in the way of overhead supply. There aren't people that purchase the stock within the past year. They're waiting to reach parity and exit. So the stock is much freer to move higher. The company reports strong earnings. I'm going to continue to talk about that because it is proven to be the primary driver of a stock's upward advance. You also want to have those momentum indicators, the RSI and the MACD, in positive territory on your chart. And of course, the price is above at least those shorter term simple moving averages. So let's talk about some of the items that are necessary in absolutely every winner. The first is a positive chart pattern. Of course, you want to be able to interpret that price chart, but stocks breaking out of a base on volume in earnings, that is one critical component again and again. I talk about it taking time to master as far as the ability to interpret that chart, but it really is very, very critical. And you will want to take the time, if you're not already masterful as far as identifying stocks breaking out. So when you put this positive chart pattern together with those strong fundamentals, some of the most successful portfolio managers that I worked with, two managers on two separate years were named Morningstar Fund Manager of the Year. And both of them were very adept at identifying stocks that had companies that were producing and supplying innovative products, in turn had strong earnings and sales, and then also had a positive chart pattern. Talked about stocks emerging out of bases. Your typical base is going to be an 8 to 12 week period of consolidation. We talked about that ring RNG in the beginning. Very typical. It was about a 9-week base that it emerged. It can be shorter as well, but this is going to be your average base period. Let's take a look at a company that was innovative and still is in its field, and the company has been very profitable from being what's called a disruptor in retail. I'm talking about Shopify, SHOP. We're looking at a weekly chart, and the stock actually came public back here in June of 2015. And this often occurs where the stock, a lot of excitement centered around it, it gaps up to new highs before pulling back. And then you want to keep an eye, because it was during this period that the company was producing revenues. We weren't seeing much in the way of earnings, but this period here at the end of 2016 into the beginning of 2017, the stock advanced out of this flat base. We talked about this is a weekly chart, so we're looking at about a 10-week flat base. And this particular week here, the company it reported strong earnings, and we can see that it was a really big driver for the stock. It advanced from this period. We're talking about a 2-year period. It advanced 300% out of that flat base. It did have about an 8-month period of no progress, and oftentimes these big leading winning stocks will have these big advances. It's not always going to be a lengthy 8-month period, but they will have periods of consolidation before re-emerging and advancing another leg up here on strong earnings. So what we're looking at here is a daily price chart. And I wanted to share with you back in that period of consolidation. It was really quite a bit in the way of back and forth. This is when you can either move over to another stock that is in more of a confirmed uptrend. But I did want to point out to you, coming out of this 2018 bear market, how you can identify your buy point on this particular stock. The beginning of 2019, the stock advances to a 52-week high. We talked about that. We also had it occurring on volume with a positive RSI and MACD. And of course, the stock did go on. This has been a big winning stock for the MEM EDGE report. And again, very much a disruptor. They provide a software platform for retailers to, it's a very comprehensive platform. And of course, during the lockdown, their popularity improved even more. So here we're looking at another daily chart. This is taking us to the beginning of this year, but we can see that software stocks really fell out of favor in the September period of 2019. And I'm pointing out to you how you can identify when this these winning stocks reverse their downtrend. And again, it's going to be all about the stock breaking above its shorter term simple moving averages, does so on big volume with your positive momentum indicators. And SHOP did in fact go on to have a very extensive advance out of that. It suffered a bit in the bear market, but certainly has been a very big winner. This is a more recent chart as of today on Shopify. So we can see it was one of the first leaders out of this March bear period of this year. And the stock did go on to have a very significant advance. It was a triple-digit winner for our MEM EDGE subscribers. But again, you want to have that exit plan in place. And I talked about when the stock breaks below key support, in this case, the 50-day red simple moving average on big volume. And in fact, the stock was removed from our list as it continues to falter here. We're seeing a little bit of a shift away from these lockdown stocks. So let's go ahead, because you also want to make sure you're really tuned into the industry group that that winning stock is a part of. This is the software ETF IGV. And so Shopify, we talked about it breaking down here in September. And in fact, the entire software group did falter, as did the broader markets, but these guys got hit a little bit harder. And you want to be aware of that. If your stock is faltering and the rest of the group is moving to new highs, that's going to be a signal that your stock is in trouble. It's not outperforming its peers. Another concept I wanted to point out to you with these winning stocks, this is a smaller software stock, APPF. Oftentimes they will emerge out of the space on volume due to earnings, have a nice significant, in this case, 8-month advance, and then consolidate and pause before another leg up. That's very, very common. So you can keep them on your watch list if you're not inclined to stick around for that base period, but it is very, very common. Let's talk about another company that has been very innovative and has really provided excellent execution. This is Lululemon. LU. We're looking at a weekly chart. They're athleisure wear manufacturer, but again, just really pointing out to you how important those year-over-year earnings growth. Take a look. This is taking us back again, 2017 into 2018. Huge year-over-year earnings growth. This is that 2018 bear market, but the stock emerges out of that 39% year-over-year, 35. So really just consistent earnings. They were a big disruptor. They did introduce, for instance, in 2018, innovative menswear, their digital international sales picking up here in the beginning of 2019, and on the stock goes. Here is a daily chart taking us to October of this year. And you can see it was a big winner out of this bear market as people wanted to have comfortable athleisure wear while being confined to their homes. The stock, this was another big winner for our MEM EDGE report, a little bit of consolidation before hitting a new high in price. This is that breakdown. We did remove the stock from our suggested MEM EDGE holdings list on this break below this 50-day. This is that exit plan, and you can see huge volume on that decline. So you want to be aware of that. This is taking us to October 7th. The stock's trying to reverse the downtrend, but it's been a real underperformer for 2 months now following that break. Let's take a look. This was another big winner for us, a small cap computer services company, PRFT. But again, on the daily, I want to point out to you the significance of these earnings. Above 20% year-over-year earnings growth are the propeller, the driver for the stock. And again, be sure and have that exit plan. This is the bear market, and PRFT really has not gotten back on its feet again. But more importantly for our work here is how important the earnings growth is in driving these stocks higher. A daily price chart helping you with your decision making. This is a shorter term 2-week base breakout on volume as well as on earnings, and Appfolio goes on to trade quite a bit higher. Another disruptor here, of course, we are all very familiar with Tesla. We're looking at a daily chart, and this is taking us right into the March bear market. But again, I want to point out to you, this is a gap up here last October. The company reported earnings and sales that were well above estimates. Nice advance out of that breakout. And then here in February, right before that, this bear market, they did come in 20% ahead of estimates, but of course they did get caught in that March downdraft. Here we are looking at another daily chart of Tesla. And what I did want to point out to you is the fact that Tesla found support at this 200-day simple moving average, and only 4%, I believe, of stocks did find support. Most of them dropped. This was a sign of relative outperformance, which then translated into huge numbers going forward. Let's take a look here at a current chart of Tesla and strong revenue. This is July of this year, record-breaking sales in China. And then we had more good news. Panasonic increased their investment in Tesla. The stock split. It did reach certainly valuation levels that were rather excessive. It sat out, but then this week, Tesla's added to the S&P 500 index. But more importantly, as your driver here initially, are these record-breaking sales, which in turn is then having other companies increase their investments and so on. Netflix is another company, really innovative. This is taking us right into the bear market. And during this period here, the company at this juncture, they did report earnings. We're looking at a weekly. They added 3.6 million new members, which in turn drove their earnings. Nice advance here, another strong earnings, and so on. Each of these arrows is pointing you toward their strong earnings. This is that 2018 bear market, but again, big year-over-year earnings growth is going to be that primary driver. This is a chart taking us into April of this year. It was hitting a new high, again, ahead of earnings. Big winner out of this bear market, but an innovative company that is providing streaming media, super high quality. So let's take a look. I talked about being in the right industry group. I'm going to make the case for why technology will continue to lead us higher. Cloud computing, it's continuing to transform businesses, keep workers connected, and it is an advance that is anticipated to continue beyond the pandemic. It really has taken hold. We're seeing the rollout of 5G finally. It is definitely taking shape, needs to be paid attention to. A lot of companies in there that are advancing. From my MEM EDGE report, we've identified several leaders. And then artificial intelligence. It's really improving productivity across many industries. Here's a recent, actually, this is taking us into April XLK. The technology sector was one of the first out of this bear market, and that's indicating leadership. Here's a current daily price chart. It's faltering a little bit here, but still in an uptrend. Within technology, semiconductor stocks. This is an area that we are favoring currently, still looks very constructive. This is a current daily price chart. Some of the leaders that have been big winners and remain on the MEM EDGE list: Qualcomm, Gap Up, all about the earnings, continuing to advance. NVIDIA, another big winner for us. So let's talk about how you can screen for these big winning stocks based on what we have covered here. So far, we talked about one of the items is the stock is hitting a new 52-week price high in price. That can certainly be one screen that can point you toward these winners. Is the stock up on volume, breaking out of a base and in a strong area of the markets? And I just touched upon technology being a very strong area, and then where you can search within that. Is the stock outperforming? Oftentimes this outperformance that's taking place now, if the metrics as far as earnings, sales in a strong group are behind it, it'll continue to move higher. And of course, you want to screen for those strong earnings and sales as that driver. And really important, is it breaking out of that base, out of a period of consolidation? These are ways that you can screen. So I do want to say thank you for watching. If you would like more information about my work, go ahead to meminvestmentresearch.com. I do have a discounted MEM EDGE report trial. And if you use the discount code StockCharts, you will get a discount 20% on all of my courses. And you can email me with any questions, Mary Ellen at the MEMEdgegroup.com, and check out my shows on StockCharts.com Thursday and Friday afternoons. Take care, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.